I welcome you all on behalf of Part University. I am your course instructor, Dr. Gil Rahim, and we will today discuss electronic stock exchange topic. Starting with the topic, what is electronic stock exchange? First, have a discussion on what stock exchange basically is. In the previous lecture, we discussed about the market in which stocks are bought and sold for the second time, and already traded securities are bought and sold, and shares are traded again and again on the same platform that is known as secondary market. And the secondary market examples are Pakistan Stock Exchange, New York Stock Exchange, London Stock Exchange, and all those stock exchanges. Today we will discuss about electronic stock exchange, which don't have physical location, but basically it's an exchange in which electronic trading is done through your mobile phone or through your uh, laptop or through your computer. Let's get to the definition. The move to electronic trading compared to flow trading continued to increase with many of major exchanges around the world moving from flow trading to computer electronic trading. Electronic stock exchange is basically a trading platform which is online, which is available from your laptop, which is available from your computer, which is available through internet, which is available through mobile banking app or mobile stock exchange trading app or you through a mobile. And through this you can go for buying and selling of shares even sitting at your home, even sitting at your office from anywhere. And this is the world which never sleeps. I used to quote this statement in class as well. We are living in a world which never sleeps. We are working in an environment which, if you work from home, is 24 by 7 away. So, electronic stock exchange is an exchange in which we move from flow trading, like Pakistan Stock Exchange trading platform or London Stock Exchange trading platform, which is done on floor on their in a physical location, to electronic location, to online location, to online trading process, and that is known as electronic stock exchange. Now, what type of trading is done in this electronic stock exchange? Trading in financial markets can broadly be split into two groups. There are two types of trading which is done through electronic stock exchange nowadays. Number one is business to business trading, often conducted on exchange where large investment banks and brokers trade directly with one another, transacting large amount of securities. First is B2B and second is B2C. B2B means business to business. Many investors sit together online and do trading on online electronic stock exchange. Many brokers they sit together with investors and they carry out this process of trading online, and they do transactions on this way. They sold, they sell shares and stocks on this in this way. They sell their, you can say, other stocks or debenture or financial instrument on this way, and the buyers, which are large business tycoon or financial institutions or financial companies or investors, they bought those shares from them on the same platform. So that business to business transaction is known as basically business to business platform of trading, which is mostly used in electronic stock exchange. Second platform which is used in electronic stock exchange is business to consumer, which is also known as business to client or business to customer. Business are directly offering shares and stocks of the companies to the consumer directly, and consumer are listed there on electronic stock exchange. So if the consumer are willing to buy shares of any company and company offer that to their clients, they can buy that on electronic stock exchange uh, flow. Now, what type of trading is done in this B2C? B2C trading include retailers individual buying and selling relatively small amounts of stocks and shares. Small amount of transaction of stocks and shares are done at this retailing platform, mostly by retailer from who are selling their stocks to the consumer directly. Second are institutional clients like hedge funds, fund manager, insurance companies, trader for large amount of securities, and brokers. Brokers are sitting on this electronic stock exchange and they are buying shares on behalf of customer because customers are mostly busy in their business activity or their financial activity or their, you can say, their any other job activity. But if they are carrying out that thing on electronic platform, they hire the service of broker, they hire the service of fund manager, they hire the service of hedge manager, they hire the service of investor banker who buys shares and stocks on electronic stock for them and do trade. Same goes for business. Businessmen are mostly busy. companies employees are mostly busy so that they can go for electronic stock exchange trading. What they do, they basically go and talk to this brokers and agents sitting on electronic floor to do trading, and they charge commission. This commission charge both from businessmen who are selling their share in stocks and from the consumer who are buying their share in stocks. Clear? Moving ahead to the next slide. What is the explanation of this electronic stock exchange? How we can explain this concept to a layman, to a simple person, to a simple investor, to a small investor, to a person who is not much involved in financial transaction, or to a person who is not aware of financial literacy. So what do we do? Majority of retail trading in the United States happen over the internet. Retail trading volumes are drafted by institution, inter-dealer, and exchange trading. Explanation of this electronic stock exchange. Majority of retail trading in the United States happens over the internet. Retail trading volumes are drafted by institution, inter-dealer, and exchange trading. What this means is basically in US, all the trading of stocks are done mostly on electronic stocking. Why? Because people are busy. US life is far much busy than Pakistan life or than third world countries like India or China or Russia or other countries. But US life is so busy that the people don't have, investors don't have time to sit on the trading platform, even electronic trading platform. So what they do, they either hire service of broker or agent, or they do it personally from their home in evening time, on their free time, or through mobile app, or through their laptop. And the dealer networks also working from home. They are doing some other businesses, but in office they are going for electronic trading. Some people, even investor like us who are job holder, who are working in any other jobs, they when they get free time in the day, they go for electronic trading on electronic stock exchange and they buy and sell shares. So through this process they earn money. So two category people are running here: business to business, businessmen selling their shares to other businessmen, business companies selling their shares to other business companies, business tycoons selling their businesses shares to other business tycoons, and B2C, businessmen or business tycoons selling their shares to customer directly, and consumer buying directly from the businessman shares, which is also a trustable platform because there are no third party involved. Although broker and agents are there because of the busyness of the both parties, of the businessman or the customer or even other businessmen, but still the transaction done on electronic stock exchange, which is a reliable source. Second paragraph says for instruments which are not exchange traded, number one is US Treasury bonds. The inter-dealer market substitutes for the exchange. This is where the dealer trade directly from one another through inter-dealer broker companies like GF Groups, MDC, Partner, etc. Here we talk about business-to-business transactions on electronic stock exchange. We talk about business to consumer transactions on electronic stock exchange. But the third network is dealer-to-dealer network, inter-dealer network, where two dealers who are trading shares of different companies trade with themselves. Buying selling took place between dealers network. Buying selling took place between inter-dealer network. Buying selling took place between dealerships. That is also done on electronic stock exchange platform. Then here they are quoting, the author is quoting about the example of GF Group or BGC Group. Let me quote here example of telecom company. For example, if the investment manager or financial investment analyst of the Mobilink is sitting on the electronic stock exchange and they are dealing with Wired investment banker, or you can say UFO or ZOM. So this basically that all are telecom sector companies and they are dealer to dealer dealership. Same goes for Honda Motors investment analyst deals with Toyota Motor or Suzuki Motor or Hyundai Motor. Same goes for paints. Berger Paints do trading with ICI Paints or Master Paints. Same goes for, you can say, bike. Honda Bikes company investment trader do trading with Zimco Bikes, or you can say United Bike or Hero Bikes. These are basically dealership network trading, and it's also must. You must be thinking, sir, why dealership are needed? Because everyone need money, and these are the ways to earn extra money. Nowadays we call it side hustle. We call it affiliate marketing. because you are doing one job or you're doing one business and you are earning money, but you want to increase your income. You want to increase your income stream or income source, and you are going for electronic trading, or you're going for business to business transaction, you're going for business to consumer transaction, you're going for dealer to dealer transaction. Clear? Then the acted as middlemen between dealers such as investment banks or investment banker. This type of trading tradition took place over the phone, but brokers moved to offering electronic trading service instead. Mostly service nowadays are done on phone. Broker call the dealer or businessman that XYZ company shares are selling. If you want to buy it, let us buy it. I will quote the example of Bazaar movie. Indian movie Bazaar in Saif Ali Khan, the Kotari, and that the boy who Rohit or what his name was, Yerizwan, was the front man of the that Kotari company, and they did transaction on the behalf of that company with other companies. That was not a business to business. And you were watching that movie that the other businessman was at the end uh, forced to sell on loss even the shares. And the Kotari, who was the main king of this stock exchange, Bombay Stock Exchange, he even earned money from the loss of that person. Even. Why? Because he invested all his money in the market, raised the market artificially, pumped out his money, and the market was going to crash. And at the crash time, he bought the sales shares of that other person who was opposition to the Kotari, and again injected the money, and the shares got increased. So this is a double party, party game in which dealer to dealer, business to business do transaction, electronic stock exchange, and they earn money. And I will tell you frankly that they sometimes earn abnormal profits on this transaction. And a layman like us, business to business consumer, could not do even such things. Clear? Moving ahead, similarly, B2C trading traditionally happened over the phone, and while some still does, more brokers are allowing the clients to place orders using electronic system. Business to consumer, mostly dealing is done through broker. Why? Because consumer is mostly doing job or doing business or doing something else, but not doing trading fully. He or she must be involved in trading, but to some extent. So they need the support of broker. And broker, you can say, capitalize the opportunity to utilize for their commission and profit. Their commission and profit, and they earn money through this profit. And this money help to run the wheel of electronic stock. Why? One, the broker is not only working for the customer in B2C, but it's working for the businessman as well. It's working for the business company as well, and they charge commission on both. And I have told you before in the previous lecture that third party is a person who earn a lot of money without investing any single penny, single rupee in that. So this is basically that case. Then many retail discount broker or charter like Charles Schwab, E-Trade went online during the late 90s. Most retail stock broking probably take place over the web now. Two major companies who were doing trade in US electronically in 1990s, who till 1990s they went to electronic stock exchange trading. Mostly two names are counted as Charles Schwab and E-Trade. These two websites are the places which are dealing directly with business to consumer. And then I'm talking about the old case in 2000. Now if you see Daraz.com, now if you see Metafair 5, now if you see Xness app, now if you see Pakistan Stock Exchange app, now if you see Binance, these are basically business to consumer. We all are consumer, we can go for trading on that. And they are businessmen who have develop an apps which we are using on mobile phone or even a laptop to get their income. Clear? Then large institutional clients, however, will generally place electronic orders via proprietary electronic trading platforms such as Bloomberg Terminal, routers 30,000 extra, Thomson router, Ilkan, Bonds Pro, Thomson Trade Web, Candy. You all have to Google this today to know which electronic platform of you use the most. These are the platforms which I am quoting here for your assignment work to Google out how many transactions are done. You will start to see that more transactions are done on this than New York Stock Exchange. More transactions done on New York Stock Exchange than Nasdaq Stock Exchange. Why? Because these are alternative brokers apps used for trading in stocks, and they are you can search it from your mobile phone or search it from your uh, laptop. I will repeat the names: Bloomberg terminal, number one. Number two, router 30,000 extra. Number three, Thomson routers Elkin. Number four, Bonds Pro. Number five, Thomson TradeWeb. Or number six, Candy, which connect institution clients to several dealers or using their broker property software. Brokers have developed a system which is software which is basically carrying out transaction between dealership network or business networks and customer directly. Amazon is missing here, but it's not only stock trading. Here we are quoting the stock trading or shares trading platforms. But if we go for Amazon trading app, even Amazon is offering drop shipping. You take order from US or you take order from New Zealand or you take order from Europe and you place that order in China. China makes those things for you and deliver directly to US or New York or New Zealand or Europe countries, and you earn money from that. That is drop shipping. That's banned in Pakistan, but that is not banned in international world. So that is also the type of electronic trading, but that is basically business trading or products trading, and we are talking here about the financial trading. We are talking here about the stocks trading. We are talking here about the shares. Clear? Moving ahead, for stock trading, the process of connecting counterparties through electronic trading is supported by financial information exchange protocol. There must be a network. It's not a Bitcoin. It's not a cryptocurrency which is not controlled by the government. Governments have developed a software or system which is known as Financial Information Exchange Protocol, which needs to be followed when you are registering businesses to that platform, electronic stock exchange, or you are registering to consumers, or you are registering dealers on that. And after following that FIX, Financial Information Exchange Protocol, you can go for trading electronic stocks. This is used by vast majority of exchange and traders. The FIX protocol is industry standard of pre-trade messaging and trading execution. You go for trading of such apps or such things when FIX protocols are followed. And if they are followed, you can go for trading on that electronic stock exchange platform. While FIX protocol was developed for trading stocks, it has been further developed to accommodate commodities such as foreign exchange, derivatives, and fixed income trading. Like these three financial instruments are also placed on electronic stock exchange. Number one is foreign exchange. Foreign exchange is foreign currency. You can buy and sell any currency, euro, dollar, pound, real, dirham, pak rupee on this electronic stock exchange if you follow fixed protocol. Number two, derivatives. Derivatives are those financial instruments which are when brought to the market, their price is designed. Price is calculated. Otherwise, the price cannot be calculated. Those are financial instruments which are brought to market to calculate price. That are not derivatives. And third is fixed income trading. Now you must be thinking, sir, what is this? That fixed income trading. Fixed income trading is that trading if you develop a portfolio on the basis of choosing big five companies of high return, medium high companies of medium return, and five low companies of low return. You will definitely get some of those companies which will be giving you fixed income, which will be giving you fixed return, not all, but some of them will definitely be giving you fixed income. That is known as average long-term fixed income return. Average long-term fixed income return, and that is the most important thing you look for trading in a economy. Clear? That's all for today. Thank you very much. Thank you very much for listening, and inshallah we will get back to you in next. Allah.